Hi, my name is Varun Sanan. Welcome to this episode of Market Talks. Today we will be speaking about building materials as a sector. As you know, Market Talks is where we demystify the various sectors of the Indian economy. Today I have with me Sahil Shah, who is the fund manager for our mid and small cap strategies, and I'd like him to throw light on building materials as a sector. Hi Sahil.
Yeah, hi Varun. Thanks
So,
for having me here.
So Sahil, as I go along, what I see these days is that most billboards across Mumbai have either OTT or a lot of real estate projects, newly launched real estate projects. This wasn't the case about 2 years back.
Absolutely.
Is there something that's happening in real estate that is actually making developers put out a lot of these billboards at very expensive sites for people to see them and invest in them?
So I think clearly a lot of launches have happened on the real estate side by the builders, and that has to do with the inventory absorption that has happened, especially during COVID times, because people who were hesitant to buy homes or were not buying homes, looking at the interest rates that were prevailing during the COVID times, and also because they felt that they need a larger home, a better looking home. A lot of people started buying new homes.
Yeah.
What that did was that a lot of inventory, which was there pre-COVID and that was lying there for last many years, we had reached almost 45 months of inventory in the system. That started getting absorbed. And what that did was that new launches had started to happen because the older homes were getting absorbed. So yes, these billboards that we see on the road is a function of a lot of new launches have started to happen, and a lot of new demand has started to come back.
So are these just domestic residential real estate where the demand is happening, or there is more in the real estate slash infrastructure space that's going on?
So I think it is to do with both. So one is the real estate that is doing very well. The other thing, if you look at last 10 years, neither did real estate do very well, and neither was private capex on the uptrend.
Yeah.
In fact, the percentage of private capex of the overall capex had been continuously going down because of various reasons. One was that there was excessive capex that was done in the previous cycle, and that was getting normalized, and it took almost 7-8 years to get normalized.
Sure.
So it was a function of both the real estate cycle as well as the private capex, which is now coming back.
So who's the biggest beneficiary out of all of this? Are real estate developers or infrastructure companies or manufacturing companies? Who's the biggest beneficiary out of all of these?
So it is going to be, obviously the primary beneficiaries will be companies who are supplying capital goods to the private wherever the private capex is happening, the real estate companies or the developers. But I think a broader beneficiary of this will be the building material companies.
That makes absolute sense, because building materials will be required by everyone, be it a company that's building houses or flyovers or even ports. And the kind of economic activity that's happening in India is to another scale right now.
Absolutely.
But building materials is a huge sector, right? I see tiles as building materials, I see glass as usage in houses, etc. So within, can you break it down for us? What are the trends within that broad sector of building materials?
So if you look at building materials, as you rightly said, that it consists of many sub-segments.
Yeah.
or many products, whether it is tiles, plywood, and even within wood panel you have laminates, MDF companies.
Absolutely.
And there are separate companies which are listed there. So that's a great thing. You can have exposure to a particular segment and their sub-segments. So I think building material is a segment, and why we like building material more as compared to owning a developer, while we do have developers in our portfolios as well. I think the major reason is the return on capital for these companies, because these are like quasi brands. If you go to some developed economies, a lot of these segments would not be classified as brands as such, right? So a tile company cannot or would hardly be a brand in a developed economy, and same is true for a cement company.
Yeah.
Something that goes behind the wall, right, where the brand is not visible, is also a brand in India.
Yeah.
And that what makes these companies I would say, earnings which are more resilient, the return on capital which is much higher as compared to the real estate companies whom they are supplying to. So that is the reason why we like building material companies.
Very true, because I can think of 5 cement companies straight out in India. I can't think of one American cement company. I can think of 3 plywood companies. I can't think of an American plywood company, but I can think of American phone companies or shoe companies, etc. That's absolutely correct. But help me understand this, because my common understanding tells me that at such high interest rates, and interest rates are high not just in India but globally, people would shy away from buying new houses, etc., or upgrading their lifestyle. And interest rates at these levels, we still see a lot of demand for new housing, etc. Why is that happening?
So obviously, when real estate cycles started to kind of do well in the country after a lull phase that was there for 7-8 years, it was the interest rate which was one of the triggers to kind of start that real estate cycle. But now the interest rates have again gone back to the pre-COVID levels. So I think the real estate sales is more a function of income effect and wealth effect. So when we talk about wealth effect, it is either through land prices, where investors would be owning land and they would have seen significant appreciation in their land values, or it can be stock markets.
Sure.
So wealth creation can happen in different ways. So we have seen good amount of or significant amount of wealth creation that has happened, and we have seen how the markets have behaved in the post-COVID era. So I think that is also one of the biggest triggers for people to consider buying bigger and better homes for themselves. And the other part is the income effect, where the income effect is, I would say, the visibility of income and the growth of income has not been challenged so far.
That's correct.
So that is one of the major reasons why I think that despite having interest rates going back to the pre-COVID levels, we are still seeing good amount of real estate sales happening in the country.
So I think that should then continue. If that is what your hypothesis is, I think that should continue, because from what I hear and understand is that right now India is in that sweet spot of high growth relative to other economies as well. Plus, we're migrating from this low growth, low income country to a medium income country, which should augment well for a lot of these real estate kind of plays.
Correct.
Fantastic. But within real estate, how do you feel that a lot of these companies, or within building material, a lot of these companies will do over the next 5 to 7 years? And with a lot more competition coming in, do you think things like GST, etc., has made life simpler for some of the existing players?
So I think just coming to your second point first, because of GST, e-way bill and the increasing compliance, the building materials as a segment has been dominated by the unorganized segments, right?
Yeah.
If we talk about pipes, it would be 50% unorganized. If we talked about wood panel, it would be 60-70% unorganized. In different degrees, there has been competition that is coming from the unorganized segment. Now, what GST and some of the compliance measures that government has taken has done is that the organized players are benefiting. And when we say organized players, it is the listed companies which are growing at a much faster rate as compared to the unorganized player. So that is one of the triggers which is over and above the growth that we are seeing in the real estate segment.
I think, so from what we've conversed so far, I can clearly determine that probably the down cycle for real estate is over, and we're in an era of an upcycle for real estate, and this should last for a significant period of time.
Absolutely. I mean, something that has gone down for last 8 years, and if it has started to go up, I would say we are at the beginning of that cycle of real estate. And building materials as a segment, because of the increased compliance, because these are quasi brands, because they make good return on capital, and typically they don't require outside capital to fund that growth, and that is what leads to a lot of accretion to the minority shareholders as well, and that is one of the reasons that we like building materials as a segment.
Thank you, Sahil, for throwing your insights on building materials as a sector.
Thanks, Varun.
I think you made a very compelling argument about this entire space of building materials, and investors should look out for this in the future. Thank you.
mutual fund investments are subject to market risks. Read all scheme-related documents carefully.